Hi everyone, thanks for joining. My name is Chris. I look after the advisor channel in Swoop. I'm joined by my colleague Shane. Shane, do you want to just give yourself a little introduction?
Sure. I'm working on the unsecured team as a corporate funding manager. So basically looking at all unsecured options as well as corporate funding, anything from as small as 5,000 up to 5 million. Always happy to discuss with advisors and clients.
Stuff. Rob, do you want to give yourself a little introduction?
Sure. Hi, everyone. I'm Rob. I'm from Penfold. We're a modern workplace pension provider. I'm here to talk to you today, give you a quick introduction on Penfold and also tell you more about salary sacrifice.
Amazing stuff. Thank you both. So, agenda for today, folks, is I will talk to you about Swoop, just to see what's new. There's been a few developments with the portal and our white label, so I'll be able to go through that. Shane's going to be talking about the market, especially the UK market, to see what's happening and what's going on. And as Rob mentioned, he's going to be talking about pensions and salary sacrifice as well. So what I'm going to do is go share my screen. Questions are open. Don't feel afraid to ask a question, and then we can just take it from there. So you should be able to see my screen just now. Perfect. Okay, perfect. So if you're new to Swoop, or even if you're existing, the landscape in Swoop is ever changing all the time. There's so much that we can help with other than funding. So when we are got yourself a portal or got yourself a white label, this is everything that we can do to help. So as soon as that client's onboarded onto the platform, there's 4 different pillars that we can help with. On the left-hand side, you've got equity. So we've got around about 300 to 350 investors on our panel, ranging from high net worths, VCs, family offices. All we need is a pitch deck. More information that you've got is the better, and then we're able to send it out to our equity team and see if we can match them with an investor. At the top, I don't want to take Shane's thunder, but we've got lots of different ways that we can help fund your clients, from asset finance, invoice finance. You've got VAT and tax loans, you've got commercial mortgages, business loans, working capital, and merchant cash finance. Gone are the days where a business loan just covers lots. So if you do have clients that are looking for money, for example, if they are looking for 50,000, it's not sometimes a case that a 50,000 is the best way to go. It can be broken down into certain different ways. We can also look at refinancing, but again, Shane will talk about that more in a second. On the grants piece, we've got a specialist R&D team. If your clients are looking for R&D, we are FCA regulated for that as well, so feel free to pass over your clients for R&D and we're able to have a look. We're able to kind of help to see if a client would be valuable or not. But if you don't do R&D within your practice at the moment, please reach out to your account manager or customer success manager and see what we can do with that. In terms of grants, we've got our own grant finder within the app as well. So we're able to search local, national, regional, sector and council based. If you're like me and before you reach Swoop, I used to work in RBS in that West. It was a nightmare to try and find grants. Used to be on Google and used to go around and rabbit hole searching for hours upon end. You really want to help businesses with grants, but it can take a lot of the time. Now, when Swoop's got a grant finder within the app, you add the client on board, it takes 5 minutes and all your grants are there. We do have a grant team as well in the background. So if your clients are looking for grants, but they are undertaking a project, for example, putting in solar panels, EV chargers, they're taking on a member of staff, they're moving premises, that's all important and they could be eligible for grants that are potentially not shown. At the bottom, you've got your bank accounts, you can search for insurance, we can do pensions, we can do FX, savings accounts, we do credit safe reports, insight reports, and you can also submit your utility bills and we're able to see if we can save you some money as well. So from Swoop as a product, when we're moving forward, what we're trying to do as an advisor team is we really want to be more proactive than reactive. We want to give you all the data, we want to give you all the information, and we want to say, look, this is what's going on with your client at the moment, and this is what we can help with. So that's the way that the advisor team is going to be moving forward. What I also want to show you today is the white label. So there's been massive upgrades to the white label at the moment. So we can actually do this for your practice and we can tailor make it to your practice as well. So this is my own one. Ignore the white label. That would be potentially made to your practice. Well, it would be made to your practice. So if you can imagine your logo is going to be here. And then what you can do is you can actually have this part of marketing campaigns. You can have this on your website. You can have this as a link. You can put it on social media. It's such a valuable tool to have. So the way I use the white label is I can put it on Facebook to my community group, and I can say simply, search for local grants available. All the client needs to do is go onto the link. And then what they're able to do is they're able to go through this. I'm looking to secure funds. Say we're looking for a grant. And then what they're able to go is go through this themselves. Once the client goes through this, it takes around about 2 minutes to go through. And what the client's able to do is they're able to self-serve. Now, the beautiful nature of this is you don't need to do any work as an accountant or a bookkeeper. This would preload for yourself as well. So this is what the client would see. So the clients are able to see what loans are available. So you can see for this specific business just now, it's having a think. It's looking into all the information that you've input. So there's 23 available potential results. Now, they're all different. So they can range from funding circle to potentially merchant cash finance to lots of different options. If I was looking for funding circle and I wanted to see what more information is available, you view details and it comes up with potentially what's available for the business and what this can help with as well. What we're also able to do as well for the client, they're able to go for a look for grants. So this business here is in Scotland. So it's having a think of what grants are available. Now it's seeing that there's 2 potential grants available. If you're looking at R&D, same process. Credit cards, you're able to apply straight from here as well. You're also able to see the credit score that's available as well. So the client's able to have an idea of what their credit score is. Is it A, B, or C? But what does it actually mean? What does a credit score? Now they know what a personal credit score means, but the businesses know what if they actually have a business credit score as well. We can help with that. They're able to integrate their bank and accounting software. So we're able to integrate with Free Agent, Xero, Sage as well. And they're able to kind of self-serve. So if they're looking for utility bills, for example, they can upload their bill, let us do the rest. We're able to kind of see what rate they're on at the moment and can we save them any money. We're also able to see on bank accounts and savings accounts, and if their credit score is bad, we do have a provider that can help with the credit score improvements as well. So as a white label tool, what we're able to do if a client does go through this, they're able to go through your internal portal as well. We'll let you know that the client's been added. How do you want to proceed? Do you want Swoop to reach out to your client, or do you want to deal with that moving forward? So what we're trying to do is we're trying to do 95% of the work for you, and that 5% is you just reaching out to the client and just adding the documents that they require. If they are looking for a loan, what we're able to do is we're able to take that on board. For example, Shane will go this in a second. He'll be able to use his expertise and he's able to package the deal and get you the best options available as well. Then we're able to do the underwriting and then put it through to the clients as well. What we're also able to do as well from a grants perspective, now we can't apply for grants for businesses, but what we're able to do is we're able to say what grants are available, who they're with, what you need to apply, and where you need to go to apply as well. What you also have as well is you have your internal portal. So this is where all your clients will be added. If you've got numerous members of staff, if you've got numerous processes in place, this is where all your clients will live and breathe. Now this client, for example, here, is just a demo, not really trading at the moment. This is where you add a client on board. So if you're adding a client, you would add manually. Takes you literally 2 minutes to add. What you're able to see internally now is all the clients and all the available products that they'll be able to see. You're able to go for grants as well. You're able to do everything internally as well. So you've got 2 different options with Swoop. You've got the internal version, which means that you and your staff can manually upload the clients and able to see what's available. And you also have the white label side of things as well. What is new is at the moment is that once you kind of build up your database, we can also do bulk uploading as well. So if you want to add a lot of your clients at the same time and allow us to kind of look at the credit score and see what is available, we're able to do that. We're able to tell you the credit score. We're able to tell you what's available. And there's lots of things working in the background as well. Last thing I want to touch on at the moment is what we're starting to roll out at the moment. You mentioned at the start of the call that I want to be more proactive as a team than reactive. We're doing what we call insight reports now. So if you are meeting new clients, if you're meeting potentially clients in the middle of the year, if you're doing the strategic meetings, you're able to do this as well. What you're able to do as well is we're able to tell you the credit score and we're able to tell you a full financial analysis of the business. So this is taken in different steps that we're taking in from Credit Safe, we're taking it from Companies House, we're taking all the public information that's available But what we're able to do is we're able to check on the website, we're able to see when their VAT's due, their corporation tax, but we're also able to give you the information that's available in terms of lending, in terms of grants, R&D, commercial mortgages. So what we're able to do is tell you when you're going into that information, preloaded with lots of information. So when you're doing that client meeting, you're able to leave with that, knowing that there could be a grant available, there could be a loan available. We can see if they can save any money with their banking. So it's a very powerful tool. If you are with Swoop at the moment, reach out to your customer success manager if you've got any clients that you would like this report done on. What's to come with Swoop is really important. We're having an upgrade in the dashboard. We're also doing invite a collaborator, so they don't need access to Swoop, but you're able to invite them to add documents. There's lots of different things that are happening with Swoop to give you the power to go out to your clients and tell them what's available and just add that value-added service, that sprinkly service on top is what I'm trying to let the team. So there's lots of things happening and lots of other things that we can do. In terms of Swoop, that's all that I need to go through at the moment. Have we got any questions at the moment? It is available to Iris Swoop users as well. That's one of the questions. Any other questions at the moment? Perfect. Shane, over to yourself. I don't want to steal your thunder on the unsecured world, but I'll leave it over to your capable hands to kind of talk about that in more detail.
Thanks, Chris. Cheers. So I thought I'd start off with a market update. So currently, there's quite a strong appetite to lend into the UK SME market. We've seen in the first quarter of this year that SME lending hit 4.6 billion, which is the highest it's been since the middle of 2022. We've seen 6 straight quarters of growth. And if you compare the first quarter of this year compared to last year, it's up nearly 30%. So in terms of interest rates, they are currently decreasing. The base rate is at 4.25% at the moment. It is expected that that base rate will reduce again next month, and many are predicting that it should reduce one more time, probably in November, and the base rate could be around 3.75% at the end of the year. So we've seen an awful lot of our long-term lending partners drop their rates, usually offering funding anywhere from 3 to 7 years. However, short-term debt does remain quite expensive. A space that we've seen a lot of growth and appetite across our lenders are through revolving credit facilities and invoice discounting. So I'll just touch on revolving credit facility first. So we have a lender on our panel basically that allows our clients to finance supplier orders over a 1 to 12 month period. So clients can receive limits of up to 500,000, which they can access to pay any valid invoice or expense. So our clients, basically, they've been allowed to free up cash flow when purchasing stock. So say they have an order for £100,000 for stock, but they can actually finance that order over a 12-month period with our lending partner. So that allows them to use the cash flow to pay HMRC, subcontractors, insurance, legal fees, run marketing campaigns. Basically, it gives them an awful lot of flexibility with that freed up cash flow. So in order for clients to avail of this facility, they must be profitable, have to be positive on the balance sheet in terms of equity, and have one set of filed accounts. So typically they are the stronger end of clients, but that's not to say that we wouldn't review it for other sort of more modest financials. Now, of course, there would have to be no CCJs, defaults on the business. Directors, the main director would have to be based in the UK, and majority shareholder would have to be a homeowner. Security on this sort of facility is typically done on a case-by-case basis. I have seen them completely unsecured with no security. Some might require personal guarantees. Others would be a debenture on the business. And the facility, it works really well for businesses that are thinking of maybe increasing their overdraft or can't get an increase on their overdraft. They might have a standard business loan where a flexible working requirement is required throughout that loan term. It also works very well if a client of yours has an invoice discounting facility. So it allows the business to pay for upfront costs for their suppliers, and then that can be settled once their debtor pays, say in 30, 60, 90 days, or whatever arrangement they have. So just on invoice finance as well, we're seeing strong appetite to lend across our invoice finance partners as well. So whether that is leveraging your full book of debtors, or even just a handful, or even just one debtor, that might be really, really strong. So recently we had a case where one of our clients who had modest financials would have secured a large contract with a blue chip company in the US. Our lending partner is more interested in who the debtor is, not the actual financials of our client. So the lending partner will then try and get a credit limit through their own insurance broker for that debtor. The lending partner was able to get a limit of £400,000. This allowed our client to finance invoices up to £400,000. They'd receive 80% of the value of the invoice up front, which massively helps considering they were on payment terms. They were on 90-day payment terms with this American company. And basically they had told me that they were unsure that they would be able to take on the contract if they're only going to get paid 4 times a year. So this facility was a massive help to them. Interest rates would start around 1.65%, and typically there's no security required for invoice discounting. Another one of our invoice finance lenders can lend up to 99% of the value of the invoice, where there's no security, no hidden fees. It's just 0.06% per day that the invoice is being financed, with a minimum of 10 days required for the invoice to settle. So just to give you an example, we would have had a client who had an invoice for 50,000 that was due in 30 days time. They needed funding as soon as possible for a new project that was about to start. They financed that invoice through that lender, received 99%, which is 49,700. 30 days later, they pay back £50,600. So the cost of funds was only £900. That £900 allowed them to really drive on the business. So quite a small price to pay in the grand scheme of things. Another thing that we've come across this quarter is a lot of our clients, for whatever reason, have recently become homeowners. And why that's important is tenants across the UK, in terms of trying to get access to funding, it can be a little bit tricky in terms of the loan amount might only be capped at, say, 50,000 over a 2-year period. Whereas if the main director shareholder is a homeowner, or has recently become a homeowner, and they've updated the land registry, this opens up an awful lot of options for us across our lending panel, simply because our lenders they don't want to take security over the home. They just have that reassurance that this person is now a homeowner, and it's much more difficult for a homeowner to just jump on a plane and leave the UK. So they have that security knowing that they're a homeowner, and they are much more open to lending higher amounts over longer terms. I'll move on to tax funding. That's something that we can seriously look at for a lot of your clients. So I know the next self-assessment deadline is due at the end of this month, on the 31st of July. So these payments, we have lenders that can finance these payments over a 6 to 12 month term. where our lenders will pay HMRC directly. No personal guarantees are required under 150,000. Of course, the business needs to be updated on all their current HMRC liabilities to be assessed for funding. We can also look at VAT funding. So that's over a 3-month cycle, but this can be a rolling facility over the course of the year. I know next VAT payments are due around the 7th of August, I believe. And your interest rates over a 3-month period probably be around 4 to 5%. Finally, we can look at corporation tax. That can be done over a 6 to 12-month period. Peak times for that would be September and December. So always worth keeping that in mind when you're speaking to your clients, if you're having regular monthly or quarterly meetings. And rates for corporation tax self-assessment across 12 months would be around 8%. So it is important, one, better to not get on the bad side is HMRC. So if you think clients might avail of spreading those payments to HMRC, definitely worth investigating with Swoop. In terms of technology with lenders, we are seeing more and more banks and lenders are utilizing open banking to speed up credit decisions, and it prevents fraud. So it is important to note this is becoming a standard practice in the industry. So if your clients are a bit uneasy or worried about connecting to links, you can just put their mind at ease just to say that this is becoming more and more apparent in every application that we've been making. So that's probably it in terms of a update from the lending team. If anyone has any questions on anything I discussed or anything in general, please do let me know.
There's a couple from me, Shane. Just, are you seeing any kind of a lot of themes coming through sector-wise, as in, there's a lot of common sectors that you're seeing at the moment, or is anything that accountants sector-wise should be looking out for that's going quite well?
Yeah, I'd say in terms of sectors, already starting to see a lot of retail businesses. They're preparing for either the kids getting back to school, Halloween, Black Friday, of course, Christmas is the big one. And then I suppose touching on that as well for retail, transport and logistics, a lot of our clients working with the likes of Amazon, DHL, FedEx, where they have long payment terms with them, maybe 60, 90 days. And these companies need to pay for petrol, pay for wages and vehicle costs. So cash flow always a requirement, and we can look at asset finance there, asset refinance as well for them, especially if they have, say, vans or vehicles on the road. Construction, motor trade, probably always looking for funding when it comes to stock and funding for raw materials and wages. And then in terms of refinancing, what I would say is a lot of, if you're an accountant or a bookkeeper, you might look at a business and say, oh, it's making, say, a 50K loss last year. It is important to review the most up-to-date management P&L balance sheet figures. So just to give you an example, like I would have had a client who made a 170K loss last year. That was mainly due to a 180K bad debt that just had to be written off. But the business had bounced back. Recent management accounts were really strong. And we were actually able to refinance an expensive short-term loan, releasing additional working capital as well for an ongoing project. So what I would say there is, if there is rationale around losses, lenders are willing to listen and seriously review the case. As well as that, if there's any assets in the business that can be financed over a longer term, that can be a commercial premises, vehicles, high value machinery. At Swoop, we have a commercial real estate team. We have an asset finance team that would be more than happy to review these sort of applications for your clients. As well as that, and I know this isn't everyone's cup of tea, but it is possible to put first or second charges on directors' homes that'll allow you to release funds. I know this is a very sort of last resort option. However, we have refinanced short-term debt, very expensive, say short-term debt over 12, 24 months, where we've released funds, we've released, say, equity through the main shareholders home over a 3 to 10 year period at, say, anywhere from 1.5% to 2% a month. It can be a useful option if the director is happy to do that, and it does actually say refinance out of expensive debt. So it is important to keep in mind there are a number of different ways of looking at refinancing debt. So yeah, I suppose that would be it, Chris.
Sure, Shane. Thanks for that. Rob, over to yourself.
Great stuff. Okay. Well, thank you very much, Shane and Chris. I'm now going to talk to everyone a little bit about Penfold and salary sacrifice. So, for those who haven't heard of Penfold before, very quick introduction. So, we're a modern workplace pension provider. We also do individual pensions as well, so we can support directors. And really, our mission is to help everyone to save enough for a comfortable retirement. Now, in the UK, only about 12% of the working population is actually on track for a comfortable retirement. It's a huge problem in the UK, and we believe that this is because of the outdated industry that is stuck with legacy systems and provides little value to employers or to employees. So we really set up Penfold to try and disrupt this industry, to provide a great platform and experience to advisors, to employers and employees. And we focus heavily on education to make sure that employees really understand what a pension is, why it's so important, and how they can save enough for a comfortable retirement. Few things to sort of note. So we were set up in 2018, and since then we've now supported over 4,000 SME clients and 100,000 users. We've got a 5-star de facto rating and voted excellent on Trustpilot. And we're regulated by all the major regulators, including the TPR. We also work with some great partners and businesses of all different sizes, from directors all the way up to larger employees, including Swoop. So Swoop actually use us for their own pension scheme. And we provide a platform for both employers and advisors as well. So if you did have clients that you wanted to manage, you can do all of that through the Penfold platform. And it's a very straightforward way for you to be able to manage all of your clients. We integrate with the majority of the major payroll providers. So we make it super simple. And most of our clients tell us that it saves them lots of time versus using other pension providers. So a little bit of context before I jump into salary sacrifice. So as I'm sure everyone's aware, from April, employer national insurance increased from 13.8% to 15%, and the threshold at which you start paying that reduced from 9.1k to 5k. I guess the only good thing to point out is that the employment allowance did actually increase from 5k to 10.5 for businesses with a turnover less of 100k. So if you do have clients in that camp, then obviously they can make full use of that. But for most employers, this new rise in national insurance will have an impact in terms of the cost of the business. And to put this into context in terms of what this would actually look like, when you take a example of a 50k employee, before an employer would be looking at £5,644 as a national insurance bill. That's now gone up to 6,750. So over £1,000 increase. And of course, if you're a large employer, you've got lots of employees, or you've got particularly high salaried employees, that's going to make a huge impact on you as a business. And we've already seen some big headlines of employers who have decided to freeze hiring or even to cut back as a result of this increase. So this is really where salary sacrifice comes into it. So, what is salary sacrifice? A salary sacrifice, also known as salary exchange, is an agreement between the employer and the employee to reduce the employee's gross salary in return for a non-cash benefit. Now, in this case, pension contributions. It can also be used for cycle to work and also for electric vehicles as well. And the idea here is essentially you're reducing the tax bill for both the employer and the employee. Now, currently in the UK, only 41% of SMEs actually use salary sacrifice. This compares to 61% of larger employers, and 85% of corporates. And the main reason for this, in our opinion, is that lots of SMEs really don't understand salary sacrifice. They think that it's going to be expensive and time consuming to implement. And we're essentially here to help employers to get their heads around a salary sacrifice and implement it so that they can start saving as a result. So I'm now just going to talk to you a little bit about what that means from both the employer and the employee's perspective. So for every £1,000 that an employee sacrifices into their pension, you as the employer will save £150. And to demonstrate what this looks like, a quick breakdown of different salaries. So 35k, the employer will be saving £263. At 50k, they'll be saving 375. And for any employee that's on 75k, that will be 563. So you can quickly see how this starts to scale. If you have a business that has 50 employees with an average salary of 50k, it's going to equate to 17,500. So huge amount of potential savings there. And I guess to put this in perspective, I've just included a few case studies of businesses that we've worked with recently, helping them to implement salary sacrifice. So the first is Duro, which is a legal tech business. We've been able to help them save over £34,000 annually through salary sacrifice. We did a big campaign recently. We went into their offices and presented them with a giant novelty check. You can see the picture here. And another one as well, Capital on Tap. It's over 700 employees and a saving of £135,000. So huge amount of savings potential there. So it's not only the employer that benefits from salary sacrifice, but also employees as well. So again, using this example, if you have an employee on 50k, this is a simplified sort of breakdown looking at without salary sacrifice and with salary sacrifice. So without salary sacrifice, the employee will contribute as standard 5%. So in this case, 2.5k, and the employer would contribute 1.5k, and they would net 35.5k. Now, if you now look to the right with salary sacrifice, so the gross salary is reduced to 47.5k, and the employee contribution of 5% goes into the employer contribution. So the employee doesn't have any contribution. It's all on the employer, so that goes straight in there, 8%. And what this means from a tax perspective is that it reduces the tax bill. So the employee is actually £300 better off through salary sacrifice. Now, what a lot of employers tend to do as well is that they can either, pocket the savings from the employer national insurance, or they can actually look to offer that back to the employee. So lots of businesses that we work with actually choose to have a match scheme for pension contributions to encourage employees to sacrifice more of their salary. And if they do, then they would provide that match as a pension contribution. So there's different ways that you can do it. Either you as the employer can obviously see all of them savings yourself, or you can pass that on to your employees. The other benefit of salary sacrifice in this example is to allow individuals to claim the child benefits allowance. So if you have any individuals that are on the sort of threshold, then it can help them to reduce their salary so they can still claim the child benefits. So just for context, if anyone's aware, once you start earning over 60K, you'll start to reduce the child benefits allowance. And once you get to 80K, you've lost that sort of completely. So here on the screen here, you can see if you have someone with a household income of 70K and two children, at that point, they would be taxed 1.1K. If they decide to go through salary sacrifice and sacrifice that amount, they would put more into their pension, and then they'll be able to benefit from the child allowance. So really worth sort of looking into that if you have any individuals that fit into that. The other thing is the 60% tax trap. So if you do have any employees that are earning between 100K and 125K, it can again help them to reduce their salary so that they end up reducing their income tax. You can see here as an example, if you had someone that was on sort of 110K, if they sacrificed that 10K there, they put that into their pension, actually they're going to be better off in terms of their net salary on salary sacrifice. So definitely worth looking into that for any directors or businesses that you support who fit into that as well. The final thing to mention as well is with salary sacrifice, you automatically claim the tax relief. So in most cases, businesses will be on a relief at source pension scheme. And what that means is that as an individual, you would have to manually claim for a higher rate or additional rate tax relief. So if you have an individual that is a higher rate or additional rate taxpayer, they wouldn't actually see that tax relief unless they claimed it manually through their annual return or by submitting a form online HMRC. So not many people know about this, and this tax relief really goes sort of unclaimed if you're on a relief at source scheme. But with salary sacrifice, because the pension contributions are taken before tax, it's automatically sort of baked into it. So employees won't need to fill out any additional forms to get the tax relief there. Now, there are a few considerations to be aware of with salary sacrifice. So firstly, you need to have consent from the employee because it is a change in their salary. So businesses need to be aware that they would need to update their employment contract, or they need to provide a side letter and get the employees to sign that before they can actually implement it. We can support with that. We have templates that employers are able to use for that. We make that very simple, but it is something to be aware of. Secondly, if you do have employers who employ individuals who are on minimum wage or close to, you do need to be conscious that if you do implement salary sacrifice, it can't take them below the minimum wage. So you might need to just do some calculations there for any cases where someone is sort of on the fence there because salary sacrifice can't be applied in that situation. Maternity leave. So if you do have any individuals that are going on maternity leave, it's wise to remove them before that takes place because it will affect their maternity pay. And then the final thing is affecting borrowing. So now this is not maybe too much of a concern these days because salary sacrifice is widely used, and we as the pension provider can provide documentation to explain that an individual is on salary sacrifice and to show what their gross salary was. But people do need to be aware that some lenders may simply look at the new sort of salary on salary sacrifice, and that may then impact the amount they're able to borrow if they're going for a mortgage application, for example. In terms of implementing salary sacrifice, so there's really 5 steps here. The first, which is what we always advise, is to recalculate the savings. We have an online calculator on our website I can share the link to. It's always a good start. It's always a good place to start here to really understand, okay, what as a business are we likely to save? So, you as the advisor, always good. Maybe you can come to the table, you can be proactive, and you can provide that value and say, have you thought about salary sacrifice? This is the potential savings if you were to implement it. Secondly, it's always worthwhile to think about how you're going to actually educate the employees. And again, we can provide resources for this. But because employees will need to opt in, it's always good to really think about how you're going to highlight the benefits to employees, that they are fully educated and they can make their own decision on that. Thirdly, you would then need to collect the opt-ins. So you'd need to go through a process of getting sort of consent from individuals, and then you'd be able to get something contractually signed so that employees are aware of salary sacrifice and you have that contractual agreement there. As I mentioned, we can provide templates for any employer. And then finally, update your payroll software. So this should be fairly straightforward. But again, we can provide guidance on this to updating your payroll software so it's now on salary sacrifice. So that concludes my talk. I've left a QR code on the screen here if anyone did want to book in a call to find out more about salary sacrifice or Penfold. I've also left my email address there as well for anyone to drop me an email. But I think if we have time now, we can open up to any questions.
Well, just one question for me, Rob. It seems like a win-win. What's like the common objections that you get? Because when you just see this and you think there's all benefit to the employee, so to speak, what's the objections that you seem to get? Because it just seems like a win-win for me, but maybe I'm just missing something, or maybe it is just a win-win.
Yeah, it's a really good point. I think it really comes down to education. I think the naming of salary sacrifice doesn't help as well. Um, you know, the sort of dictionary definition is salary sacrifice, but a lot of people use the term salary exchange instead, which I think is a better way of describing it. Because I think a lot of employees will see this and think, no, I don't want to sacrifice my salary. And until you start explaining how it works and the mechanisms and you compare, pay slips, I think for some individuals, they might think, why would I want to reduce my salary, right? So that is usually the common objection there, particularly for individuals actually opting into the salary sacrifice scheme. And I guess the second point is just around implementation. So I think, as a sort of an industry, people overcomplicate the implementation of salary sacrifice. And as an employer, it can seem like this big, scary thing. They don't know where to start. And there are, a lot of consultants out there that might charge quite a lot to implement it. So again, this is a reason why SMEs may sort of put it off. But for us as Penfold, we don't charge for implementing salary sacrifice, and it's a very straightforward process. The key thing is just making sure that you can, communicate with your employees to educate them to make sure that, enough of them are actually deciding to opt into salary sacrifice. So you as the employer can really see that benefit.
Yeah, it makes total sense. I think salary sacrifice to me means I'm losing out on something net monthly, so I don't want to do it because I'll need all the money that I can get in my. So
Yeah.
that's a fair point. I don't think we have any questions left, but what's left for me to do is say thank you to Shane, thanks to Rob for your time and your information. If anyone's got any questions or queries, please reach out to your success manager, reach out to myself. I think we're on LinkedIn as well, so please drop us a message. But no, really appreciate your time, everyone, and hopefully see you soon.
Thanks, Chris.
Everyone.
Cheers, everyone.